Hey everyone, hope you're having a great day. Today is Sunday, September 15th, 2024. Just looking at the markets last week, the market had a pretty big rally, followed by the week before was a pretty big drawdown. I did not have a video for that week. I was actually gone last weekend. But anyway, we basically just kind of retraced from the fall we had the week before. Looking here, we can see that the triple Qs finished up roughly 5%. Followed by the IWM finished up just over 4, and the S&P about 3.5. Nvidia was a big part of that move. Nvidia actually finished up about 13% last week, so that's a pretty big move, and that helped bring up the triple Qs and the SPY as well. So in my last video, we actually drew this box right here that the ES was trading in, and we can see that basically that following Monday, or actually Tuesday because Monday was a holiday, the market actually pulled back pretty far, and we're basically just kind of back up into this range again right now, we can see. And we can actually see I've got a price level drawn here about the 5350 area. We want to look at a 4-hour chart. And this is actually just kind of a recent support area. We did not touch it last or the week before, but we did come close. But, you know, as I say, we can see we're basically back up into this box area right here. And looking at the Fibonacci retracements, we're back up basically in between the all-time high and the 23% retracement area. We do have some major news announcements next week. The FOMC meeting is on Wednesday. So if the market likes what they say, don't be surprised if we actually come back up and touch the all-time high again. And speaking of news announcements, on Tuesday you have core and retail sales. Wednesday, obviously the FOMC announcement. Thursday, unemployment. So Wednesday is really going to be the big day for news. That's probably what's going to move the markets. As far as levels, this is actually just the next Friday's expiration, which is September the 20th. As far as open interest goes, you got 5,600 here, 5,550, and then 5,500 have the most open interest. Above 5,600, we can see there's a decent amount here on the call side at a few certain levels. Looking at the gamma exposure levels, roughly just 5,600 right here, and then we got a decent amount right in here as well. And lastly, we'll look at some cash secured put type trades. This is still 3% out of the money, a 10/18 expiration, and this is just a list of some ETFs I have. And then lastly, this is the list that I like to call just weeklies. This is S&P 500 stocks that offer a weekly options expiration. We're 2% out of the money, 10/18 expiration as well. So once again, we're 33 days to expiration on this. Everything is listed here in alphabetical order. So you have the last price, the 52-week high, 52-week low. You have the close, the percent change from Friday, yield here. So if it pays a dividend, that'll tell you that. The expiration date, once again, the strike price to sell a cash secured put. This will tell you the bid and the ask, just to kind of let you know how easy it would be to get into that trade. The return on capital for that trade for the cash secured put. The annualized return on capital, 2% out of the money, just saying this strike is at least 2% out of the money. The strike price listed again right here. And then we have the percent move to go from either the 52-week high or the 52-week low. Days to expiration, 33. We have the delta of that option listed right here. If it is a 30 delta or below, it does highlight green. We have days till earnings, and this is going to be trading days, not calendar days. We have the RSI listed right here, the IV percentile listed right here, the cash required to put on the trade right here, the cost basis if you get assigned, and then the discount, which is basically how much cheaper you're getting it compared to today's price. All right, thanks for watching. Have a great day and bye.